Are you curious on how you can quickly identify amazing stocks? Well, in this video, I'm going to share my strategy for finding stocks with huge growth potential. Welcome to Expanding Wallet, home for empowerment. We inspire greatness and help you learn skills to create generational wealth. My name is Andrew Clarke, and I'm the CEO and founder of Expanding Wallet. And I've worked as a consultant for multi-billion-dollar companies for over 9 years. And what I've found is that two companies can have very similar products or services, but have very different results. And why is that? Well, after watching this video, you'll understand why. So in this video, I'm going to break down what I call the 3 components to an amazing company. And then I'll share actually a few key questions that I asked myself before looking for investing in any company. And then the last thing I'll do is I'll show you a couple examples of companies I've invested into by using these strategies. And then before I jump in, make sure that you hit the subscribe button so that you don't miss any life-changing information from Expanding Wallet. Let's dive into my 3 components for an amazing company. An example. I'm going to use Apple as an example, and I'm going to actually show you what they did when Steve Jobs came back to the company. So we're going to go all the way back to when Steve Jobs steps back into the company, because at that point, the company had actually been doing terrible. They were actually losing money, and so they called Steve back to come save them, basically. He came back in 1997, and the very first component that we're going to talk about for an amazing company is that they have to have value. The greater the value to the customer, the better the chances of success. And it's the most obvious of the 3 I'm actually going to talk about. So I won't spend too much time on it, but just think about this. Basically, you have to either fix someone's problems, or maybe there is no problem, but you come up with something that makes their life better. Some examples are you save them time, you save them money, you increase security, or you increase health. Now, let's see how Apple created customer value when Steve Jobs returned. Okay, so let's see what Steve Jobs does. He returns in 1997. The company is losing money. But in 1998, they become profitable and getting everybody excited about it. So now the company's profitable. Then what do they do next? They come out with the iPod. This is a massive industry disruptor. They then come out with the iPhone, another massive industry disruptor. And lastly, the iPad, another industry disruptor. And so all of these Apple products have huge value to customers because their value comes either in their functionality, it could be their size, and performance. They all are designed to do really well and create a ton of value for the customer. Now I want to just go into the second component of an amazing company, and that is trust. And where does that trust come from? It usually comes from the executive team, but specifically the CEO. And Steve Jobs already had a great reputation because he had started Apple, built it up, and then left, and it went down after he left. So he had that great reputation. And now there's a couple questions that I like to ask about a company. Does a company do what it says? Do they deliver as they say they will? And Apple was a company that was delivering. Once Steve Jobs came back, they were delivering on what they said they would. Next question is, do they make corrections when things go wrong? Well, let's look at the next slide. Apple products are known for having long lines during their new product launches. Why? Because yes, they definitely make corrections when things go wrong, because people are willing to wait in long lines to get the latest Apple products, knowing that there's a good chance, that there will be some issues. However, they trust that the company will fix those issues through updates, right? The other thing that is not so obvious, but I do want to just point this out. Does the CEO do what's needed, even if it's an unpopular choice? And Steve Jobs did something really interesting that I don't think many people knew. So when he came back and they were in a bad money situation and were losing money, he borrowed over $100 million in, or not borrowed, but he got over a $100 million investment from their competitor, Microsoft. Now, that was unpopular and he took some criticism for that, but that's what was needed at the time to get them through that tough situation. And so he made that decision. Now, Steve Jobs was also known for mesmerizing people with the benefits of the Apple product, which I think helped sell the products immensely. However, he also did a few other business moves within the company when he returned. Steve Jobs makes a fundamental move to the business structure. He lays off many of the general managers. So he basically trims the fat in a way. And he does this so that there's more clarity in the business. And the next thing that he does is what I think was his biggest move. And the move that he makes here is that he reduces the number of products that they're working on. They go from working on 350 products all the way down to just 10 products. This increases the focus in the company because now thousands of employees are focused only on a very few number of products. And Steve's philosophy was that whatever Apple made, they were going to make it well. All right, so let's move to the third component of an amazing company. The third component of amazing company is community. So how did Apple create community? Well, they did that through their Apple Store. That was the secret sauce. And so if you walked into an Apple store, you're walking into an Apple store and you're greeted by an Apple employee. You can then try Apple products. You can get your questions answered. But here's the thing. It was a place where people who were either Apple customers already, maybe Apple fans and they were raving about Apple, or people who didn't even have any Apple products could all come together in one place. And this is how they started to build that sense of community. And there's another key component to it as compared to most tech companies, which don't usually have their own product store. Many of them might be in companies like Best Buy, in a Best Buy store. And so what's the difference? Imagine you go to Best Buy and you're asking about a product, a certain product. Well, maybe they'll suggest another product to you from another company. That wouldn't happen in the Apple store because it's all Apple product. This sense of community is another thing that helped Apple grow tremendously. Because think about like a sports fan, a diehard sports fan. They're going to tell you about how great their team is and they want you to get on the bandwagon, right? Well, the same thing goes for those raving Apple fans. They're going to tell people about how great Apple products are and why they should get Apple products. And so this is going to help Apple tremendously, or it did help Apple tremendously, because now it saves them a lot of money on marketing, okay? Another key component there that, money-wise, when you create great products, people realize that and they want to talk about it and tell their friends how great it is. Before I share the key questions I asked myself before looking for stocks, I want to remind you to hit the subscribe button and smash that like button so that you can be a part of the Expanding Wallet community. All right, so what are the billion-dollar questions I asked myself before looking for a stock? The billion-dollar questions are this: what are the future problems people will face? The next one is, which companies are positioning themselves to solve those problems? With those questions in mind, I then evaluate those companies by looking at the three components of an amazing company. And so let me just dive in and show you a couple companies that I had found over the years by using this method. So the first company I found a few years ago was Okta. Now, what does Okta do? Okta is a cloud security company that also allows for you to enter in, or I should say, they actually just allow you to reduce having to enter in your password over multiple services that you might use during the day, during your workday. So for instance, you log into Okta and now you're in a cloud where it has all your different services that you might need to log into over the course of your day. And instead of having to put in a password there each time, your password is already saved in there. But they have what's called a two-step authentication process. So you not only log in your password for Okta, but then you have a password that's sent to your cell phone, or I should say a PIN code. And now you enter that PIN code in, and now you're into everything you need. And so what was the need there? It was for efficiency, right? Okta was helping with an efficiency problem through saving time of not having to entering in multiple passwords in a day. And then also their security. That was really the key. At that time, I was thinking about cybersecurity and cloud security specifically, and Okta provided safety for these companies. Now, let's talk about trust, because that was the value piece of it. Now, trust. The CEO seemed very competent. That was really all I kind of had to go off of as far as trust. And then community. Were they building community? No, I didn't really see any community building. However, the value was so strong, and just having at least a competent CEO, I felt like this could be a very good investment because it would help with future problems, especially seeing that working from home may be something that would become big. Because let me show you where I started investing into this company. It was back in 2018 when I started investing, around 30 bucks. Now what happened was, because of the pandemic here in 2020, working from home obviously became much more popular, right? And we see that the stock itself shot up because a lot of companies started reaching out to Okta. And so their sales went up a lot, tremendously. And so again, just that thinking about the future, right? What are the future problems that will be faced? What are some solutions for companies? And now let's move to the next company I found. This next company is Appian. Appian, what they do is they help by creating a platform where you can create applications or apps, right? Where if you don't know how to code, you can use their application and create your app. So this is a huge value, right, for customers, because it'll save time and potentially even money. And as far as trust goes, the CEO had an extremely good reputation in the industry. And the third component to an amazing company is community. Now, they didn't have community. However, I found that they had a customer service model that seemed to be very good, where if you ran into a problem where you're trying to do something within their software, but you couldn't get it done with their current offering, you might need some coding help. And so you could use their customer service line and someone would help you code that in, or they might code it for you. And so I thought that was a key component for their business, even though, again, they're not really building the community. The big key with community is that non-customers can be included. I bought them back in 2018 as well, around that same $30 mark. And again, their chart looks similar-ish, but again, they took off heavily during the pandemic. A lot of that was because of apps that needed to be used for tracking purposes, COVID-19 tracking purposes. So that helped their growth tremendously as well. Now, during those points with those companies, I didn't invest a ton of money, but I was buying on the dip. So when the market went down in 2020 during the pandemic, I did buy more shares of those companies. And the key point that I want you to understand here is that stocks will go up and down constantly, but I focus on what the business is doing. Is the business executing on their plans and their goals? And are they working towards fulfilling on fixing that problem or creating that customer value, right? And if they're doing that, then I continue to buy more during those dips, because eventually I do believe that these companies will start to be very successful. Another key point I wanted to make is that very few companies have all three key components I've mentioned for an amazing company. And so even in those examples, most companies do not create that community, that sense of community. Also, if you want to be added to the wait list for my beginner stock guide, then you can also find that wait list link in the description below. And as always, remember to learn all that you can, believe in yourself, and take actions that allow you to grow.